What do construction executives think about the next 4 quarters regarding confidence in the civil construction market? Hi, my name's Taylor Maurer, and I am the founder and senior managing partner here at Heavy Civil Resource Consultants, a boutique search firm specializing in civil construction recruitment. We are business advisors and trusted talent consultants to the top civil construction and engineering firms, as well as consultants to some of the best talent in the industry. So many things have happened in the first few weeks of this quarter. I wonder if we were to run the poll again, if we might see substantially different results. Let's take a look at the current events. We are now seeing two international wars rage between Ukraine and Russia, and more recently, Israel and Palestine. Back in June, the government was able to avert a government shutdown and extend the borrowing limit. But there seems to be some chaos in the GOP, which ousted Speaker McCarthy and has been unable to successfully vote in a successor. And here we are on the heels of another presidential election year. There also seems to be some doubt surrounding the GOP presidential candidate, which months ago I think we all assumed would be Donald Trump. While President Trump is engulfed in legal battles, with many of his inner circle pleading guilty, a clear presidential forerunner has yet to emerge. Now, Biden was able to secure an infrastructure bill since coming into office. But as the oldest serving president in history, many question his health and fortitude for putting in another 4 years. His son is also embroiled in legal battles and nepotism, further illuminating the elitist and entitlement endemic to our government as a whole. And I believe that there are many Democrats out there that suspect that Biden would not be able to pull off another presidential win, with so many of those states being close in the last election. All right, now let's dig into some numbers. The feds kept the target range for the federal fund rate at a 22-year high of 5.25 to 5.5% in its September 2023 meeting. While the U.S. inflation rate has dropped significantly with rising interest rates, we saw a marginal uptick from a trend low of 2.97% in July to 3.7% at the end of September. At the end of July, construction had the highest level of open positions ever recorded, a whopping 650,000. Eranban Basu, chief economist for the ABC, stated that the construction unemployment rate inched up to 3.6% in June, but that's still the second lowest rate on record. Across all industries, unemployment remains near a 50-year low, and the prime age, 24 to 54, employment to population ratio rose to the highest levels since 2001. We saw the highest employment gains in non-residential building and the heavy and civil engineering sector. That can easily be explained by the higher mortgage interest rates, yet home prices have yet to really decrease at the rate one might expect considering the trending higher interest rates. While many seem to be finding the security in funding in the infrastructure bill and a push in manufacturing, rising material costs and energy costs are eating away at profit margins. Now that we've covered all of that, let's dig into our poll results. We saw less than a 10% drop in those who felt like there would be a strong growth for the next 4 quarters in civil construction. We saw about the same for those who felt like it would see moderate growth. And we saw the highest rise in those who believed that the civil construction market would shrink by 50%, from 10 to 15%. Those that felt like the civil construction market would remain the same or stagnant stayed at a constant of 22% from the last quarter. Now, while the 50% increase in those thinking the civil construction market would shrink may be alarming, it's still only 15% of our total respondents. I would love to get your thoughts and feedback on the state of the economy and what the future of the civil construction market looks like to you. Please leave your comments below and book a call with us if we can help. Thank you.